Let's bring on board Aditya Agarwal. He's Manager Technical Research at Yes Securities, who now joins in on the show. Great to have you with us. To begin with, what's the bias for the markets right now? Do you think that this kind of a recovery that we've seen is just sort of a flash in the pan? Because all of the attempts that we've been making to pull back seem to be awfully short-lived.
Exactly, as you put it right. All the pullbacks are short-lived, and today also we made an attempt towards the 200 DMA. So yesterday was the first time when we broke the 200 DMA from Jan 2017 onwards. So it was more than a year we were trading above the 200 DMA. Yesterday we broke that comfortably, and today we failed to go above the 200 DMA, which is close to about 10,180. So today markets resisted close to about 200 DMA, which is 10,180, and in the coming days probably will continue to wobble around 200 DMA. Having said that, intraday charts suggest that markets are extremely oversold. So hourly charts and 30-minute charts are suggesting markets are extremely oversold. So a minor pullback from current levels cannot be ruled out about a 200 point rally from current levels. But again, markets are headed lower because all the attempts that are made, markets are sold into. So markets are making lower highs and lower lows. So until unless we make a higher high, so the previous high was 10,400. Until unless we cross that high, markets continue to remain weak.
All right. Aditya, on that note, given that you expect the markets to continue to remain weak, what exactly are the stocks that according to you do look attractive?
So I'm playing for a short-term bounce from current levels. Today markets held on to 10,100, which is a crucial support, and I expect markets to continue to hold on to 10,100 and play for a minor bounce back in the markets till 10,300, 10,400 levels. Stocks that I'm looking at are LIC Housing Finance. I have a buy call on LIC Housing Finance for a target of 550, keeping a stop loss at 500 levels. A buy on Tata Communication for a target of 670, keeping a stop loss at 620, and a buy on Cadila Healthcare for a target of 415 and keeping a stop loss at 370. So 3 buy calls for a bounce back from current levels.
Okay. Aditya, it's interesting to know that the Nifty Bank managed to, the Nifty managed to lift itself without any support from the Nifty Bank. We saw the Nifty Bank actually buck the general trend seen in the market. What's your stance on that benchmark?
Clearly weakness is there in the banking space, especially the PSU space. That continues to look weak and expect PSU banks to remain weak. However, minor pullback in the PSU bank index cannot be ruled out. But overall weakness persists in the bank Nifty, and that will continue. So this was a rally which was mainly led by the IT, as you correctly pointed out. So I expect the IT stocks to continue to help Nifty go up, and probably auto is looking attractive at current levels. So you had Eicher Motors bounce back. Maruti is holding on for last couple of trading sessions, so you can expect Maruti also to participate in the rally. However, Bank Nifty continues to look weak, and I don't see too much of an upside in the Bank Nifty from current levels.
Okay. How are you reading into the kind of carnage that we witnessed within the oil marketing space as a whole? It continues to remain awfully volatile for the likes of HP, BP and IOC. What kind of an underlying trend are you seeing here?
So clearly, if you take a look at the crude oil prices, they have bounced back in last 2 trading sessions, and they continue to trend upwards. So we sense that oil marketing companies, HP, BP, and IOC, they'll continue to remain weak for some time. In the meantime, you can have Oil India see some bit of buying, and ONGC also. So don't expect too much of a rise from oil marketing companies.
Okay, Aditya, stay on with us. We'll chat lots more about the markets with you. We'll slip into a very short break.